Afternoon, everyone. Welcome to part two of proposal and grant writing with a focus on budgeting and reporting. My name is Sherry Jimmy. I'm a principal consultant with Morris Interactive. Morris Interactive is an award-winning company based primarily out of Saskatoon, Saskatchewan, but with offices in other locations across Canada and the United States. And we've been privileged over the last 20 years to work with over 220 First Nation and Indigenous organizations. So we're pleased to be able to present part two of this webinar. We also wish to acknowledge that we are on Treaty 6 territory in Saskatchewan and homeland of the Métis, and are privileged to have our head office in that location as well. So with moving to part two of proposal and grant writing, I thought it would be prudent of us to do a quick refresher on part one for those of you that maybe were unable to join for part one or just needed a quick refresher. So I'll let Paul, before I introduce him, put that slide up. Okay. So in the last session, we went through the 12 steps in proposal and grant writing. We started off by talking about how to match your criteria, the criteria of the application to the needs of your organization, the gathering of core documents, the importance of knowing the timelines and deadlines, following an application guide, developing a project plan, and developing a checklist of requirements. We also talked extensively about ensuring that you know who you need to partner or collaborate with in writing them and submitting the proposal, because many proposals are based on partnerships. We talked about the importance of linking yourselves with a program officer for the application and the funding body. And then we talked a bit about the actual writing and budgeting of the application, including the narratives. And then, of course, that final point where you press send and submit the application. So going back to point 10 on budgeting, this session is going to focus on the importance and the processes involved in budgeting for proposal and grant writing, very specific to CORP, or the Community Opportunity Readiness Program, and CEF applications. So with that, I'm going to turn it over to my colleague, Paul Marjerrison, to lead us through this webinar.
Thank you, Sherry. So just to give you a high-level overview, we'll talk about the basics of budgeting, which I'm sure many of you are familiar with. Then we'll talk about the process of doing a CORP application, as well as talking about the CEF contribution program. The Saskatchewan Indigenous Enterprise Foundation is responsible for those grants in Saskatchewan, but there are very similar organizations across Canada if you're in another province. And then we'll talk about, once your project is done, some guidelines and best practices for reporting on the proposal you were successful being awarded with. So we have some acronym definitions here for you to refer back to if you don't understand any of the acronyms being used throughout the presentation. This is going to be a bit of a crash course, and we are putting on a presentation May 7th and 8th to go through proposal and grant writing, as well as budgeting and reporting in great detail with examples and exercises on May 7th and 8th, which we'll talk a bit about at the end. So we encourage you to register for that if you have the opportunity to do so. So what is a budget for? Generally, a budget sets targets for revenue and expense for the period, establishing the expectations for the cash receipts that you'll get to fund your expenses, and how you'll be spending the funds received in the future based on management's plans. Budgets usually only have one or a few revenue categories, whereas there's often multiple categories of expenses to estimate. The general guideline for band governments and for companies and not-for-profit organizations are a really good guideline is provided at by Indigenous Services Canada, and it's called Annex A, and this is how they like to see the reporting. So we've got, your revenue section at the top, where they want to see, funding from ISC and First Nation Inuit Health Branch, Health Canada, other revenue, which might include own source revenue, trust fund interest revenue, and then where you have revenue carrying over that was unspent from the prior year, they like to see that as well. Then down below, you can see there's a great variety of expenses that they look for details in the budgeting. And these ultimately end up in your financial statements at the end of the year. Now, in terms of what we're talking about today, it doesn't necessarily get to this level of detail, and oftentimes, there are quite a few less expenditures as compared to, an overall budget for multiple departments and multiple programs in a band government. In terms of budgeting for proposals, the approach, generally speaking, is to estimate the costs that you need to undertake the planned activities, and then use that to determine the amount of funding to request in proposal submissions. Common proposals we see going to Indigenous Services Canada for funding include professional and institutional development, and governance capacity development generally for leadership at in band governments. Jordan's principle is a very heavily funded and heavily used proposal-based program administered by Indigenous Services Canada. LEDSP, or Lands and Economic Development Services program, is funding generally targeted at land planning, land use, and then the Community Opportunities Readiness Program, which we are focusing on today. The CORP program is project-based funding for First Nation and Inuit communities to support wide range of activities for pursuing economic development activities, and it's meant to identify opportunities and provide funding where nations or economic development corps may have an equity gap or lack the financial resources to pursue them. And in that case, CORP will allow nations or economic development corps to submit proposals for funding. Now, in terms of budgeting for CORP related costs, typically what we see is that CORP funding is intended to pay for third-party services, professional services, in the initial phase, and then the capital cost of investment in the second phase. CORP funding may cover internal costs of an ECDEV Corp or a band government, such as project-specific salaries and benefits, travel, rent, utilities, minor maintenance, and overhead, and administration fees as part of that. But it must be clearly tied to the project and justified from the perspective of the funder. So What we tend to see is that budgets for corp applications focus a lot on third-party costs and don't have as much budgeting of internal costs for funding. The two phases of corp are phase one is funding for professional services, and that's typically it's typically 80% of the cost. So 20% has to be funded by the nation or the ECDEV Corp. And they'll fund up to $250,000 per project. Corp PF, or project funding, or phase two, is when you're getting into actually buying a business, creating a business, and building a building and buying equipment, or an expansion of an existing business. Corp will fund up to 40% of the cost of purchases for a new business, and they'll go up to $1 million in funding for the project. So if a project is $2.5 million then or more, then you can get up to $1 million in funding for that project. Where you're acquiring a business or an expansion of expanding an existing business, they'll only cover up to 30%, and the limit is $750,000. And so these caps will, ultimately impact how big of a project you're able to undertake, and help you determine how much money your nation or ECDEV Corp needs to contribute towards undertaking these type of projects. For phase one, typical activities include the actual creation of an economic development corporation, as well as economic development limited partnerships, as well as establishing policies, creation of a strategic plan, board training. It can also be related to board recruiting and recruitment of CEOs and CFOs. And that's usually the first step. You should have the foundation in place, establish a governance policy, establish a finance policy, establish a HR policy and an employee handbook, get a strategic plan in place in terms of the direction you want to take your ECDEV Corp or economic development for your nation. Then from there, funding is available for business development to look for opportunities, as well as marketing and communication, which might be website development or translation and communication with members in the community. Then you get into what we typically see as the third phase, which is getting into actually executing the creation or acquisition of a business or expansion of a business. And for those, feasibility assessments, business plans, and forecasts are generally the central activity to get that process going and to work towards an application for phase two corp funding. If you're buying a business, corp will require a valuation, and they will also provide funding for legal support, tax planning and structuring, and transaction support, such as finding bank financing to complete an acquisition. Then where you're looking to construct a business or expand a business, corp will also fund professional services to prepare for the construction of the building or buy the equipment required to get the business going or to expand it. And that generally is things like architectural design, surveys, environmental studies, geotechnical work, engineering work. Basically the things that you need to have done in order to be prepared to set off on undertaking a major capital construction project. In terms of ECDEV officers and role in the work. There's a wide range of activities under Corp Phase 1, which takes a lot of coordination and consultation in addition to performing the work and coming up with the deliverables. So the professional services support is intended to provide capacity and expertise to execute and accelerate the economic development activities. It's very possible to do the work in many areas independently, and professional services support can be avoided if you have the capacity to prepare the deliverables. But in some cases, you may not have the expertise or credentials to do the work, and have to get that outside support. Oftentimes, the basis or the preliminary draft can be prepared to reduce the overall cost of the service from the service provider. And even where funding is received for professional services, the EDO still has a lot of responsibility, getting the Corp app done, coordinating all the activities, providing the information required by the professional services company, consulting internally with the nation, providing qualitative and financial information, reflecting the strategic plan, coordinating with the builders and engineers to get the studies done, and then finally reporting. So you can see here, there's a lot of considerations here that will ultimately impact the budget you're putting together for your project. So for a Corp Phase 1 proposal, the preparation of the proposal typically requires the following to be put together in the proposal. Starting with a description of the project and the anticipated benefits to the community. You need to get quotes together for the services that are being looked at for funding, and then compile a budget, including the services required and any, it's important not to forget ancillary costs associated with a service provider, such as travel, accommodation, meetings, and meals, where they're going to be coming out to the nation and, spending time out there. Oftentimes that can get missed, and then that ends up being 100% out of pocket. Then, looking at opportunities to incorporate internal costs, such as project specific salaries and allocation for use of space, and where you or your chief and council or board of directors are going to have to travel and attend meetings in the city elsewhere. It's, I always encourage nations or ECDEV corps to include those costs, because if you don't ask, you don't get. And then administration fee for your finance department to provide support on the accounting side as well. And so again, 80% of, once you know what your overall budget is and what needs to be done to get a project across the finish line, then you take 80% of that amount to include as the request for the amount to fund, and then the remaining 20%, you need to make sure that you'll have funds available to cover 20% of the cost to complete the work. And then a band council resolution or an economic development corp board resolution or a letter of support is generally required as part of the application to make sure that it's been approved internally to move forward. So in terms of budget for a Corp Phase 1 project, this is a Corp application that I was involved in. And so it was for a strategic plan, which was to be done over a 2-day session, and the cost was 23,000 quoted for the strategic plan professional services. Then travel for everyone that was going to be involved was included, and an admin fee at 10% of the cost was included as well. This was submitted in August or September. So unfortunately, as the year progresses, the budget gets thinner and thinner, and it's harder to get some of these ancillary costs covered. So the ECDEV Corp was successful in getting funding approval for the strategic plan activities, but the travel and overhead costs were not approved for funding as part of the project. Some general notes on submitting corp proposals. You can submit multiple corp projects in parallel. So maybe there's an on reserve project and then an off reserve project. Rather than waiting to complete one and moving on to the next, if you have the capacity, then it's possible to submit multiple applications in parallel. The phase one work can also be done, it can be broken up into kind of stages, so that if you want to get started, but you have multiple applications going in and you're worried that it might not get approved because you've asked for a lot of money, you can break it up into multiple phases and only request funding for the first phase to increase the likelihood of getting approval for your corp funding. The corp officers attempt to fairly distribute their funding budget across multiple nations. So that can also limit, the amount of money they're willing to provide and how many corp applications you can get approved. Corp phase one applications can be submitted any time of the year. Typically, they are reviewed on a monthly basis by committee, and also phase one work often can run in parallel with the corp project funding, the capital funding. You may still require professional services support during that second, during the execution of creating or acquiring the business. An important thing to remember is that only costs incurred after funding approval is issued are covered. So if you've submitted a corp application and then say, yeah, let's get the ball rolling, and then it's 2 or 3 weeks later that you get your corp funding approval, they may deny the work that was done in advance of the formal funding letter coming out, and that can cause issues with not having adequate funds to cover the costs of the project. So for Corp Phase 2, generally how we see these projects going is Corp will provide 30 to 40% funding on the project. There is an expectation that the nation contributes approximately 20%, but it can be less. I've seen 10% there. And then the balance would be financed by a bank. And a bank will lend against the hard assets of the business, and typically might consider lending up to 75% of an acquisition, or 60 to 65% of the hard costs. So that does provide some wiggle room where a nation's equity contribution capabilities are limited. And in terms of putting in your phase 2 application, the project must be considered shovel ready before an application will be reviewed by the corp committee. And there's generally 4 intakes a year, assuming sufficient funding remains in their budget. so they want to see the application and have be provided with any available information about a month in advance of the shovel ready date, the deadline that they submit, the deadline that they prescribe. So this allows the corp officer to prepare, basically to put together a presentation to take your project to committee and tell them why it's such a great project and why it should be funded. It is a competitive process, and there's a ranking system that's used to determine, who scores the best and should be the successful applicant. Generally speaking, the corp mandate is for any funding that they provide to a nation, they want to see a 5 times payback over an 8-year period. And that can be in the form of profits generated by the business, but it's also in terms of salaries that are created for the community members. And so if you're looking at, going for the full $1 million, they want to see a $5 million payback to the community over an 8-year term. And so that's roughly, $600,000 to $700,000 a year in return in terms of salaries as well as profit. So they would like to see it, generating maybe $300,000 in income and generating, $300,000 to $400,000 in salaries. That will generally chin up to that criteria of payback to the community. I've also, had some feedback that corp likes to see larger projects that or not necessarily larger, but looking at businesses that can generate, significant net income and grow significantly over time. And that's attractive to them to get involved in projects that are, have this window of opportunity to grow and generate wealth for a community. And finally, generally there's additional weighting given to first-time applicants. So if you've received corp capital funding in the past, another nation with a project that isn't quite as strong as yours may be successful because it is their first time applying. And where you're unsuccessful, it's always possible to push it out to the next intake and go to compete against the projects in the subsequent intake. And you may also have the opportunity to look for ways to improve the business plan and make it more attractive for corp. In terms of putting together a forecast for corp for the creation or acquisition of a business, forecasting is kind of like budgeting. Oftentimes there's a lot of similarities, but the forecasts for corp PF and for C for that matter, they look to go beyond just the anticipated revenues and expenses that the business might generate. They also like to see a cash flow statement which reflects investing and financing activities. They want to see a forecasted balance sheet to show what financial position the business will be in over time. And they like to see detailed assumptions in terms of how you came up with your forecasted revenues and expenses, and your how the operating platform or how your operations are turn into numbers. They also want to see the capital budget for construction costs, so that will detail out where you've got a new building, it's going from foundation to finishing carpentry, and oftentimes a construction project consultant will be required to put together a budget of the construction costs, and that might require an architectural design to be able to put together that budget, and that's usually beyond the capability of a business plan writer and generally an accountant who just doesn't have that experience. they also want to see the amount of bank financing to be obtained, and showing that the business will generate enough income to make the payments on the loan, and will, won't have any trouble going into default on the loan. So the process for phase 2 Corp app applications is again somewhat similar. Putting in the description of the business and the anticipated benefits. Then they'll want to see attachments of all the items that are required to be considered shovel ready. The business plan, the forecast, the design, the engineering work, the surveys, the architectural plans, environmental reports. If you're looking at a new build, if you're looking at buying a business, they want to see a letter of intent. They want to see the valuation. They want to see that you've got a legal team in place to do the purchase and sale agreement. And then within the proposal, they want to see a breakdown of what the sources of monies are to be able to pay for the business. And so again, there you'll see your ISC funding at 30 to 40%, equity at a minimum of 10 to 20%, and bank financing at a maximum of 40 to 50% based on those other two criteria. I have seen bank financing at more than those amounts. But this is something that kind of, once you have your budget together, then you're able to look at how is this going to get paid for? How much money do we have? How much can we contribute to the project? How much support do we need from a lender? And how much support do we need from ISC? And then again, a BCR or a board resolution or a letter of support to go along with the application. And then from there, oftentimes it's really good to get in touch with a corp officer to make sure that the materials provided are sufficient, that to let them know if there's still some work being done to get them all the documentation they need to be shovel ready, to get that feedback to make sure that you're going to meet their needs in terms of achieving shovel ready status. So here's an example of what an business acquisition budget might look like in a corp application. You've got, let's say the business is going to cost $1.5 million to purchase. So your contribution at 10% is $150,000, and the balance to be paid for with bank financing and funding is $1.35 million. And then in the project financing section, you're going to put in those details: $150,000 from the applicant, $450,000 in funding from ISC, which is 30% of 1.5 million, and the balance to be funded in debt. And Corp likes to see that you've requested and received a term sheet or a commitment lender from your bank that demonstrates that they're willing to finance it subject to their own due diligence. So in terms of the CEF contribution program, they will provide conditional non-repayable loans, which generally end up being forgiven and are effectively grants. They only go up to $250,000 in funding. One of the key distinctions is that for on-reserve businesses, Corp requires a head lease to be in place. And if the business or the location doesn't have a head lease in place already, it can be a very complex process, and it can take up to 2 years to get it in place. So oftentimes for on-reserve businesses, it's easier to go down the road of looking for the CEF funding to avoid this process of putting a head lease in place. Also, a few other things there. CEF and Corp will kind of work together a little bit. Corp will allow a nation to go and get C funding, and then once that, the purpose of the C funding has been accomplished, then roll into a Corp Phase 2 Corp PF application to access more capital. However, they'll subtract the amount of C funding from the amount of Corp funding that they would make available. The other thing that I've seen is, generally speaking, CEF has a two-phase process where they look to get a basic business plan submitted with an application, and they'll provide up to $5,000 for professional services support for that. And then phase 2, they want a more robust business plan with a forecast. And again, they'll provide up to $5,000 for that in a fairly easy manner. They will consider providing more funds than that, but they require multiple quotes, and they have to take a committee, and committee only meets on a quarterly basis. So what I've seen happen is we'll apply for Corp Phase 1 funding to get the business plan and forecast together. And then if it doesn't look like it's feasible to go down the road of Corp funding, we'll take that business plan and use it to make our CEF application to access the smaller amount. So just in terms of guidance, we've provided some links here. So here's the Corp program overall guidance. And in here, it also talks about the LEDSP program, which again is generally not for economic development. And so this one here is more of the, again, the $3,000 limit here is misleading. It's really this one that is the one that we see being used on an ongoing basis and covers some of those criteria that I've discussed. And then down here, it talks about the eligible expenditures, application requirements, project assessment criteria, project approval criteria, funding levels, and reporting requirements, and then provides contact information. Usually calls for proposal go out, and if you're not on those lists, you should look to get added to the list, and they'll come from Corp officers in your regional area. To get access to the Corp application, Corp has all of their applications listed here. And so here you can access the fillable form as well as the instructions to fill out your application. And you want to select the correct fiscal year, as they won't accept previous year's templates for, and you might have to write it over again. And then here's CEF's contribution program guidelines. With CEF, you'll generally need to get in touch with one of their officers to get their application package. And I was down there recently and met with one of their officers, and so they walk you through the application process and have a preliminary discussion about your project and whether that's something that they'd be willing to fund and provide recommendations if there's any issues. Okay, so on to the reporting end of things. It's a little bit more general, not as specific to Corp, but I have touched on Corp for this section. And so how do you know what your reporting obligations are? Typically, once you've when your proposal gets approved, then the agency will send out a funding approval letter. Sometimes it's just simply an email, but usually you'll see the funding approval letter as well as a notice of budget adjustment, and then it gets incorporated into your nation's funding agreement and is reflected in Schedule 7, where you can find the report that's required and the due date. Your nation will also get the GCIMS recipient notification of reporting requirements report on, typically on a monthly basis. They send that out, and it'll have a list of all the reports that are due for your nation, and your report should show on that. And if it doesn't, then it'll get added in, before you. It should be added in well in advance of when the expected due date is. And generally, these reports are tracked by what's called a DCI number. And you can see there down at the bottom right, we've got again, the Lands and Economic Development Programs Project Status Report. And this is DCI 472939. So we want to go to ISC. Place to get the reports is the reporting guide. And again, you scroll down to the bottom. You search for community opportunities readiness program, and it doesn't show up. So then you have to call somebody or find out what report that I should be using. You find out it's the LEDSP program project status report. And so again, you can download your form and populate it. And again, you want to make sure you choose the right year. If it's funding for 23-24, then choose that fiscal year to get the report. If it was funding for 22-23 and you're late, then you want to get the report from that year. And again, if you don't use the right one, they might make you fill it out. Some have let me scratch out the year in the top corner and replace it with the proper year, but it takes a nice FSO to get that. So some best practices for preparation: put reminders and the due date in your calendar. Bookmark the link to the ISC reporting guide so you can refer to it frequently, and get your form. Ensure you have the form for the right year. Review the form at the start of the project so you know what information you're going to need to provide. And if there's anything that you don't understand, then contact your FSO or your co-op officer at ISC to discuss. Another best practice is, you've found out you're getting this funding, you're off to the races, you think it's great, you're getting invoices and submitting it to your finance department, and then you're coming up on your report due date, and you ask for a report on your program, and they send you over a report, and you see that it's lumped in with a whole bunch of other expenses that aren't yours, and you ask, well, why is this happening? You say, well, we put all of the economic development funding and expenses in with our banned government reporting department. And so you're going to have to find your expenses in there. And so what I always recommend is try and get finance department to either set up a separate account numbers, or some accounting systems have what's called classes or programs where you can segregate your project, whatever you got your proposal funded by, you can separate that in your accounting records so that, at the click of a button, you can get only what relates to your project, and has a nice clean report that you can attach at the end, all your revenues and expenses, and and a general ledger transaction listing of all the expenses that you made. That'll make your life a lot easier. You should also try and get those reports during the course of your project so you can monitor your expenses against the proposal and budget to make sure you have no cost overruns. I always recommend to try and work as you go rather than leaving it right to the end as your deadline approaches. You can track your expenses and update it as you go. You can start filling out your report and putting descriptions in and, noting highlights and achievements and milestones as you go. And then when it gets time to finish off your report, you're already 75% of the way there. You also need to coordinate with team members, anyone that you're working with on the project, as well as your finance department, to provide the information that you require if anything related to the project comes in on their desk, to make sure they get it to you and that you're aware of it and that it's getting processed by your finance department on a timely basis. One big thing is getting PDF software that allows you to use the fillable forms. So if you only have Adobe Acrobat Reader, you're not going to be able to work with the fillable forms, and you'll run into a whole bunch of problems in filling those things out. So you might have to pay a subscription fee, but it's worth it, as opposed to printing out a manual form and not having enough space to fill it out completely. And working with hard copy documents can be challenging. Sometimes you need to ask questions from your finance department, say, hey, what happened here? I think we're missing an expense. Did it get coded wrong? And then there's also opportunities for you to help your finance department, making sure they've got all the invoices and deliverables. If you're running over budget, give them a heads up that this is happening. I'm planning on cutting expenses in other areas, or I'm planning on going back to corp to see if I can get more funding because, the scope of the project has expanded. And if it's going to overlap at your end, or you don't end up spending all your money, then you need to come up with a plan for any unexpended funds at the year end and submit it to ISC. And if they don't approve it, they might ask you to return any unexpended funds. It's always good to gather information before you get started. So get all of your documentation together, your approved budget, if you put together a work plan, have that on hand. Have those funding agreements and the schedules that show the amount of funding you're approved for and when, as well as your reporting deadlines, your letter of approval, and get your correct reporting template. Further to that, you are going to need to make sure that the accounting records are complete and up to date, and then request financial summaries, which is generally to get your income statement or your profit and loss report that shows all of the revenues and all the expenses for the project. You might also want financial reports such as general ledger transaction listing that details, what all the money was spent on. The deliverables in terms of what work you got done by professional services, as well as anything that you've prepared internally, and then any agreements entered with other parties as part of the project. When you're filling in the report, again, similar to the application, there's a lot of similarities, putting in the description of the activities, then reporting on what the budget for the project was, how much funding you were approved for, and the total actual costs that were incurred. They want to see a description of outcomes achieved, highlights of the project's key milestones achieved. They want you to attach supporting documentation of all the things that help them understand what happened during the course of the project. And if there's if you did not complete it, again, sometimes the reports are accepted as progress reports rather than final reports. So it's important to indicate what activities are remaining and, if applicable, if it's going to carry over into the subsequent fiscal year. And so here's kind of the meat and potatoes of what needs to go into the report. They've got quite a long list. So sorry, at the top there, you can see the ISC contribution to the project versus the total project budget, and then all funding expended to date. And oftentimes we put in the, where it's corp funding at 80%, we'll put in all of the expenses to date over and above what ISC funded. And then, so the narrative report is really, it's quite a long list. It doesn't necessarily have to be 10 paragraphs. Oftentimes you can refer to the deliverables, but it's good to be comprehensive in there to demonstrate that, the project was successful or not, and give them the background so that they can put a pin in this and file it away, and the detail that they need to report to their management is there. And then you can see there in section 2, they want that statement of revenue and expenditures isolated for your project. And if you can't get that out of your accounting system, you may need to do some work to get it to fit, to extract the revenues and expenses only specific to your project. And then a laundry list of supporting documents. Again, you can attach documents directly into the report, or you can send it to ISC as an attachment to an email if that's preferable to you. So you've got your report in draft. Oftentimes, once you've drafted your report, it gets fired off and forgotten and never looked at again. So what are some good practices to wrap up the process? Again, investigating and explaining issues, underspending, overspending, any activities or outcomes that were not achieved or perhaps still require further work to achieve. Get a second set of eyes on it. Your department director, finance department, someone in your finance department, a portfolio counselor, a colleague, having someone else have a look at it can help you identify mistakes and correct those so that it doesn't get bounced back to you for correction. The sign off, typically, if you were the submitter of the proposal, usually you can sign off, but sometimes it requires the sign off of a departmental director or an ECDEV CEO or someone from chief and council. Oftentimes there's an authorization delegation table in your finance policy that might dictate who's allowed to sign off on reports. Usually your director of finance or director of operations can clarify that for you. Another extremely important thing is to print a digital copy of the final report, which there's a button in the top right corner of the fillable form. And so hit that, print it to PDF, and flatten it. I've seen, reports get corrupted or things get changed in reports after they've been submitted, multiple versions. So by flattening the report and saving it to your server and, emailing it to the appropriate people, you ensure that you've got a copy of that final report. And it's good to file that report in with all the other documents that you submitted with the final report in a folder on your server. And, if you like working in hard copy, print it off and have a file so that you have something to refer back to if there's ever any questions. In terms of submitting it, usually with Corp, it's just a submission by email to your Corp officer. In regards to other proposals, sometimes they're allowed to be emailed, but then oftentimes they're, particularly for education and health, often they have to be submitted securely through ISC's digital platforms. And in that case, you'll need a local area network username and password. And don't wait till the last minute at 11:59 to try and get that done, because you're going to miss your deadline. You can also have someone that currently has a username submitted on your behalf through those systems. So again, Jordan's principle is an area where this often comes up, where it needs to be submitted securely to protect the personal information of members, or health information or things like that. What happens if the report is late or not filed? Well, it's going to show up on the GCIMS NRR report as later outstanding. For extremely late reports, sometimes it'll show up as unobtainable. That doesn't mean that you can forget about it. It's still required to be submitted. And late or unobtainable reports can cause funding halts for non-essential services. Usually not the case with corp. With corp, late reports will usually mean you can't get any more corp funding until you get this corp report submitted. I haven't seen circumstances where it's halted other non-essential funding, but that certainly is something that could come up. It will also potentially impact your general assessment for the nation, contributing, getting a lower assessment on your reporting capabilities due to late reports is always a bit of a thorn in everyone's side. So it's really important to try and get your reports submitted ahead of time, or just prior to the due date. Make sure that you keep your nation in good standing. So as mentioned at the start of the presentation, we do a very comprehensive 2-day seminar. The first day being, a deep dive into proposal and grant writing, going beyond the 12 steps that Sherry's covered, looking at examples, getting into exercises to get some practice. And then in the budgeting and reporting, same approach. We get more into, getting into the budgeting for departments and, for your Act Dev Corp. Examples of putting together budgets for proposal scenarios, and then ultimately filling out a report for the example that we did during the course. And you can sign up for this by registering at the link we've provided there. And that's pretty much it. I guess now we can open it up for questions. Try and get back into format here. You're welcome to add questions by chat, as well as feel free to speak up. I'd love to answer any questions that anyone might have. Tara, do we have anything in the chat?
Nothing in the chat.
Okay.
Yeah.
And what time do we have?
Yeah, you're right on time. It's 4 o'clock.
Perfect.
Anybody have any questions?
I guess one last closing note is, if you are working on any ECDev projects or other projects for that matter, and you're running into any bottlenecks or any challenges, Sherry and I are both very happy to point you in the right direction, to give you some feedback, look for opportunities to help you along the way, to set a plan forward. A lot of those professional services are things that we help many different nations do. My practice area tends to focus on putting together the business plans and the forecasts for businesses, and working in terms of project management to get these processes going. Sherry and I collaborate on, and our Morris Interactive team collaborate on strategic plans, putting together policies and procedures, doing the things that you need to do to move ECDev forward in your community. So don't hesitate to reach out. We're always available and always interested in working with new nations and ECDev corps. The other area that I often work in is assisting in the acquisition of businesses. So I've got one of those projects going on this year and helped the nation close a transaction last year. And those are always very exciting projects to work on to build economic opportunities and capacity in communities is a passion of Morris Interactive. I'd like to thank everyone for attending and look forward to seeing anyone that might join us on May 7th and 8th for a more comprehensive run through proposal writing, grants and budgeting and reporting.
Paul, we have one question in the chat regarding how people can connect with us if they wish to. Do you have a slide with our contact information and email?
I didn't put our contact information directly in. Tara, do we have that in our contact in the invite, or is there a way that we can get our emails out? I can also send our contact information in another PDF or other document if that helps.
I do have your guys's contact information that I could send with the evaluation email that I'll be sending out.
Yep, please do.
So I can do that.
That would be fabulous.
And I believe I'm submitting also a flyer with that email as well that I received from Caitlin.
Yes,
excellent.
That would be for the upcoming conference on May 7th and 8th, 2024. So that'll be here before we know it.
All right. All right, awesome. Okay, thank you everybody for attending. Next week will be Kendall Netmaker. He'll be speaking on Indigenous consulting. All right, have a good evening.
Thank you, everyone.
Thanks again.